All right. Hey, we have Dan Laver on today again, and it is, what are we in September? Almost September, right?
Next week, big month.
Yeah, almost August 27th. So we're expecting, or at least I'm hearing that we're expecting good news for mortgage rates. So what can you tell us about that? And we have
Absolutely. So great, Dave. Great to have me back. I am seeing September and November for scheduled rate cuts. Now, when they schedule them, they're not always guaranteed. The economy has to stay on the trajectory for them to determine that it is time to loosen up on it. So September, we have a really big Fed meeting where they're going to determine if a rate cut's necessary. They did have it planned in November, but what's happening in November?
elections.
Election. So that's going to create quite the fluctuation in the economy. But I honestly think that they're just going to kick it over to December. So what we're seeing is scheduled rate cuts. We're looking at maybe 50 basis points per rate cut, and that's going to translate to most likely a quarter percent in interest rate. So right now we're leaning at 6.5% of the market, maybe getting closer to 6.25, maybe even being able to see 5% ranges on mortgages with buy downs. Exciting times.
So you're saying you're expecting that not to happen in September, but October, November, December. So like another quarter.
We're going to see September definitely have a meeting where they're going to address when it's time to do it. If they go through with it, then we're going to see a drop in the market. Same thing with it being scheduled in November. I think they're going to kick November's decision to December with who becomes elected. And then we're going to be able to determine with these two rate cuts where mortgages are at the end of the year. And I do think that we're going to end at 6.5% on the median rate.
By the
I'm
end of the
sorry,
year.
6.25 at the rate at the end of the year. Correct.
Okay. And that can bring out quite a bit of buyers, right?
Yeah, I think we're seeing inventory stay on the market because people heard the news, and I think we're going to see it flooded next month for sure. I think that home buyer activity in September and leading into October and November is going to be increased, and I think we're going to have like a winter summer sale.
What do you think that will do to home prices?
It's going to bring back that competition that we had in COVID. I don't think it's going to be as intense as it was because literally everybody and their mama could buy a house at that time. And so I think that we're going to see it go from maybe I have two, three, four offers on this property to maybe getting into the eights. And we're going to have to blow the dust off of our loan approvals where we're going to do, 10, 15-day closes and maybe a contingency removal here and there in order to compete.
Awesome. So for what is it, the consumer price index and then the producer price index are both kind of affecting all of this, right?
Correct. Yep. We're seeing that. We're seeing unemployment get judged incorrectly with those numbers. We're also seeing that the Fed is impacting different sectors and different people's lives. The biggest thing I'm seeing too is that personal credit card usage is way up.
Yeah.
And I think that that's going to be one of the straws in the camel back for reducing rates and allowing people to get access to cheaper financing in order to slowly make that debt pay off as well. We're also seeing businesses out there too miss some payments here or there. So I think it's time for us to ease rates definitely before we start seeing the repercussions of not doing so.
Yeah. So I think credit cards at all-time highs. I mean, ever, right?
Yeah, it
I don't
is.
know the numbers, but they said that people are still, they're still spending like they've got the money.
They are, and they don't. And there's a lot of offers on the market right now where you don't have any interest payments on that. And people think that, okay, well, if I don't have any interest payments on it, then it's just free money. And it's definitely not. So I think everybody is just really feeling the pain of this market with new investors coming in, increasing rents, and everything's really tight right now. So I think scheduled rate cuts are going to provide the relief that we need to not only home buyers, but also people that have jobs, businesses to gain access to cheaper financing as well.
Awesome. Okay. How did they get a hold of you again?
Yeah, I'm on Instagram at Laverlens, Laverlends.
Awesome. So I sent out a poll. I just said with something like impending rate reduction that we are hoping for, what do you think will happen to home prices? And you should see some of the stuff I got back, the answers.
Really?
One guy said, you'll be a hostage to the financial institutions. Other people said, rate or home prices are going to skyrocket. I personally don't think they're going to skyrocket. I do have a feeling they're going to kind of keep creeping up around that 3%.
Yeah.
I mean, if you look at the Zillow forecast and the others, they're all showing, um, a slight increase. Zillow's back to like 1.8% or something in home price appreciation in 2025, but still
Mm.
2%. That's an actual healthy number for increasing home prices year over year. So
It is healthy. And then I think it'll once salary comes back in and we see our AMI increase, the average median income go up. We're at like 80% is 80,000. I think once you see that increase by $10,000, then I think that's going to ease the market in. Another interesting thing I'm seeing too is that depending on who gets elected, I know the Republican Party wants to put federal taxes on imports and take that away from US W-2 payroll income. So I think that that would be something that would help people afford to buy more too.
got it. Okay.
Because
Awesome. Well,
if
hey,
you're looking at that, man, I mean, it's like $1,000 that people would open up in their paycheck per month.
well, that's a lot.
Yeah.
1,000 per month?
Yeah, I mean, look, if you look
Yeah.
at their like I see W-2s all day and their pay stubs, federal taxes are pretty gnarly. So like some people are paying 2,000, 2,500, 1,500. So if that eases up and that opens up cash flow for them, then that's going to put them in a way better spot. So I
Yeah.
don't know
And
how that's going to impact the economy though with
well,
tariffs.
especially California, right? For taxes.
Yeah, it's
But
gnarly.
I know that I have 5 people sitting on my board up here waiting for rates to drop and they're going to pull the trigger. So I don't know if that's probably going to be right around that, 6%
Hmm.
area. What are we at today? What's like the 30-year fix?
I
Just
think it was
about.
6.46.
Yeah, so
That's when I looked at it.
6.46.
Let me
So
look.
another 0.5% and we're at 6. That
Yep.
could be you're saying by end of the year.
End of the year, I think it's going to go down to, I think the 30-year fix is going to go to 6.25 by year end, which is a pretty steep drop. Right now it's at 6.42. So maybe that would translate to like 6.2, maybe 6.18 if we're lucky.
Okay.
But that's my like just from calculating it and looking at how the UMBS reacts to basis point drops and then seeing how that would work if it comes over to the mortgage side. Typically 1 point in rate reduction leads to 0.25%.
Yeah, so it's that you mean the Fed's fund rate, whatever?
Yeah. So if they lower that, then I think we're going to see the average lower, and everybody's going to get 0.25% better for free.
Really? Okay.
Yeah, and then if you throw in a buy down seller credit, then you get access to the fives.
Wow. Yeah. Okay. Well, they know how to get a hold of you. Thanks again. And we'll check back in somewhere like maybe end of October.
Yeah, sounds good. Or we can do final week of September, Dave.
Either way.
That'll be like the last time you see me when I'm 30.
Oh, good. Well, happy birthday. We'll see how your predictions ring true.
All right, let's do it. Looking forward
Thanks,
to it.
bud. All right. Bye-bye.
Cheers.